Hey guys, welcome and thanks for tuning in. I'm Gerald, and if you're looking to buy your first home right now or in the near future, you're going to want to see this because today we're going to cover the top 5 things every first-time home buyer needs to know. Before we get into number 1, go ahead and hit that like and subscribe button. Why? It doesn't just help me out, it helps show the YouTube algorithm that you're someone who takes your financial freedom seriously and that you want to stay on the path to building long-term wealth through real estate, starting with your first home. This way, you'll be shown more videos by me and other channels like mine that are working to educate you on everything from basic financial literacy to some of the less understood ways to grow your real estate portfolio and increase your net worth. Let's get into it. 5 things every first-time home buyer needs to know. Number 1, your credit score is key. Every lender, whether it's for a car, credit card, or your dream home, will be peeking at your credit score. It's like a GPA for adults. The higher it is, the better the loan terms you'll be offered. And guess what? A small difference in interest can save you or cost you thousands over the lifetime of the loan. Let's take a look at a real-life example of a 30-year fixed-rate mortgage comparing a credit score of 740 to a credit score of 670. On a 30-year fixed-rate mortgage with a credit score of 670, you'll generally expect an interest rate that's about 3/8 to 0.5% higher than with a credit score of 740. It doesn't seem like much, and the mortgage payment is only going to be about $102 higher, but over the life of the loan, that will add up to over $36,000 that you'll pay in extra interest. I'm not saying you need to have a perfect credit score before you buy a home. In most cases, you can qualify for a home loan with a credit score as low as 580. I'm just pointing out that there's no need to pay higher rates and fees if you don't have to. So what can you do? Aside from paying all your bills on time, the number one way to improve your credit score is to keep your credit card balances low or below 30% of their limit. Here's a little known hack for those who have less than perfect credit scores when you're applying for a home loan. It's called a rescore. Most mortgage credit reports will actually display a potential score increase, and your loan officer can order a separate report with specific instructions on what you need to do to improve your score and how long it'll take. I've seen many instances where someone's credit score will increase up to 80 points just by paying a credit card off by a few $100s. That 80-point increase can save you thousands on your mortgage while only costing you that few $100s to pay down the credit card. Lenders are required to disclose your credit score when you're applying for a home loan, and if your scores are coming in below that 740, 720 range, ask your loan officer if there's a rescore available. Number 2, the down payment dilemma. So one of the most costly myths around buying a home is that you need a 20% down payment. Well, guess what? There are various loan options available that require as little as 3% down or even 0% down. In fact, the median down payment for first-time homebuyers in 2021 was only 6%. Those people who are putting a 20% down payment on their home aren't pulling those funds from their cash savings. Typically, they've owned a home for a long period of time and built up equity through property appreciation and by paying down their mortgage each month. They're selling that home and then rolling the equity into the down payment on their new home. The reason that people and mostly parents tell you that you need a 20% down payment is to avoid paying PMI or private mortgage insurance. PMI is the amount that you pay on your mortgage each month when you put less than 20% down. But let's take a look and see what the numbers say about whether you should wait to save for a 20% down payment. Let's say you have a $500,000 home with a 5% down payment of $25,000. You would have PMI of $120 per month, and over the course of 5 years, that's an extra $7,200 that you'd be paying on your mortgage. Now, let's say you're waiting to save for a 20% down payment. Right now, real estate is increasing in value at a super fast pace. But let's just be conservative and go with a 4% rate of appreciation. After 5 years, that same home would now be worth $608,000. That means you just spent an extra $108,000 to save $7,000, and that is a $100,000 mistake. So if you've got a little bit of money set aside for a down payment and you can find a property that fits your monthly budget, you should definitely consider moving forward with buying a home rather than waiting to save for that 20% down payment. Number 3, closing costs can sneak up on you. When you buy a home, the down payment isn't the only thing you need to budget for. There's this sneaky little thing called closing costs that includes fees from the lender, title companies, and state and local real estate taxes. These costs can range anywhere from 2 to 5% of the home price, so be prepared. I'm going to give you a way that you can actually get around paying them out of pocket so you can keep your money in the bank. When you're purchasing a home, essentially every mortgage program allows for something that's called seller credit. Seller credits are just what they sound like. It's an amount that the seller will contribute to go towards paying your closing costs. This is either a specific dollar amount or as a percentage of the sale price. Seller credits aren't automatic, so they'll need to be negotiated as part of your contract. So why would the seller give you a credit to pay your closing costs? Let's say you're looking at a home that's listed for $500,000, and based on the market and level of competition, you decide to give the seller an offer of $490,000. Rather than offering $490,000, you could offer the list price of $500,000 and then ask the seller to give you a credit of $10,000. That would net the seller the same $490,000, save you $10,000 out of pocket, and only increase your monthly payment by about $60. Now, what if the seller doesn't want to budge on their $500,000 net price? You could offer $10,000 over the list and then ask for the $10,000 seller credit, netting the seller exactly what they were looking for, and again, only raising your monthly payment by about $60. For this to work, an appraiser would need to determine that the property is valued at $510,000. So make sure that you work with a good local real estate agent to assess the comparable sales in the area. Seller credit is a great solution for people with just a small amount of money saved, or for those who'd want to hold on to their extra cash for reserves, other expenses, or investments. Number 4, pre-approval power. Before you get your heart set on a house, get pre-approved for a mortgage. Not only does this show the sellers that you're serious, it gives them the confidence to accept your offer. It also gives you a clear picture of what you can afford and what price range you should be shopping in. So don't go at it blind. A lot of times, sites like Zillow will display monthly payments that are pretty misleading. The payments will be based on a 20% down payment and sometimes have teaser rates that aren't really available in the market or come with really high costs. So before you start going out with your realtor and shopping for a home, it's critical that you speak with a loan officer and get pre-approved. The pre-approval process can take as little as 15 minutes to complete. You'll provide some basic information about yourself, your income, assets, and the lender will review your credit. If you're concerned about having your credit pulled, keep in mind most modern day lenders will offer a full pre-approval using just a soft credit check. So there's no inquiry or negative impact on your credit. You'll likely start with a general pre-approval letter where that property address is to be determined. And when you select the home you want to buy, your loan officer can send you an updated specific pre-approval letter with the actual property address and sale price of the home you want to put the offer in on. Sellers and realtors really like seeing that you've been specifically pre-approved for the property and the amount that you're offering. And finally, number 5, beware of the emotional buy. This is the one that no one really talks about. When house hunting, it's easy to get swayed by a home's aesthetics and ignore potential issues. You should always get a home inspection, and it's even more important that you don't get so attached to a property that you go over your budget. Buying your first home can be stressful. It's the largest financial transaction of your life, and there will be all sorts of new terminology, paperwork, and numbers coming at you all at once. But a home should be a place of comfort, not financial stress. So it's critical for you to be able to set your emotions aside and know your numbers before you submit the offer on the home. And when buying a home, you do that with the loan estimate. The loan estimate is a standardized 3-page document that breaks down all the important details of your mortgage. I'll have a full video posted explaining the entire document line by line, but for now, we're going to focus on the 2 most important details and what I refer to as your bottom line. Your bottom line is your monthly payment and cash to close, which is the amount of money that you'll write the check for on the day of closing. You'll find both of these items right there on the first page of your loan estimate. Below projected payments, you'll see estimated total monthly payment, which is the amount that you'll be writing a check for to the lender each month. And at the very bottom of the page, you'll see costs at closing, and the estimated cash to close is the amount you'll be writing the check for on the day of closing. Try not to be confused by all the other figures on the page, and remember the important numbers, which is your bottom line. And make sure that you're comfortable with this before submitting your offer. These numbers should reflect what you discussed with your loan officer, and if something looks different than what you expected, just ask why. And there you have it, the top 5 things every first-time homebuyer needs to know. If you found this valuable, share it with a friend. And remember, knowledge is the first step to power in real estate. Let's keep the dream alive.